Global currencies are the lifeblood of the world economy. These units of exchange, from the US dollar to the Japanese yen, facilitate trillions of dollars in transactions every day. Think about your daily life. The price of your morning coffee, the cost of your new phone, even your vacation plans are all influenced by global currency markets. When currencies fluctuate, so does the cost of imports and exports. Join us as we unlock the secrets of global currencies and explore their impact on our lives. The concept of currency has been evolving for millennia. In the earliest days of human civilization, barter was the primary mode of trade. People exchanged goods and services directly, relying on mutual agreement for value. However, barter systems had limitations. The need for a more flexible system led to the emergence of commodity money. Societies transitioned to using standardized objects of value, like precious metals or shells, as a medium of exchange. These early forms of currency, often taking the form of coins, simplified trade and facilitated economic expansion. The invention of coinage marked a significant step in currency evolution. While coins represented a major advancement, carrying large quantities of metal proved cumbersome. This led to the development of paper money, initially appearing in China as early as the 7th century. The adoption of paper money accelerated in Europe during the 17th and 18th centuries. Banks issued banknotes backed by their gold reserves, making transactions easier and facilitating larger-scale trade. The 20th century witnessed the rise of fiat currencies. No longer directly tied to gold or other commodities, fiat money derives its value from government decree and public trust. Today, we stand on the cusp of another currency revolution with the emergence of digital currencies. Cryptocurrencies like Bitcoin offer potential advantages in speed, security, and accessibility. The US dollar reigns supreme in the global currency arena. Its dominance stems from the size and strength of the US economy, its stable political system, and its deep financial markets. The dollar's role as the world's primary reserve currency further solidifies its position. As a reserve currency, the US dollar is held by central banks worldwide as a store of value and a means of international payment. Over 60% of global foreign exchange reserves are held in US dollars, underscoring its significance. The dollar's importance extends beyond reserve holdings. It serves as the primary currency for international trade, particularly in commodities like oil and gold. Understanding the dynamics of the US dollar is crucial for navigating the complexities of the global economy. Section 2. European Strength. The Euro. The Euro, the official currency of 19 European Union member states, stands as the second most traded currency globally. Its introduction in 1999 marked a significant step in European integration, creating a single market for over 340 million people. The euro's strength lies in the collective economic might of the Eurozone, encompassing major economies like Germany, France, and Italy. The euro's emergence has had a profound impact on European trade and finance. It has simplified cross-border transactions, reduced exchange rate volatility, and fostered greater price transparency within the Eurozone. While the euro has faced challenges, it remains a formidable force in the global currency landscape. Section 3. Asian Giants and Beyond. Beyond the US dollar and the euro, several other currencies play significant roles in the global economy. The Japanese yen, the British pound, and the Chinese yuan are among the most actively traded currencies. The Japanese yen, often considered a safe haven currency, has long been a major player in Asian financial markets. The British pound retains significant influence in international finance. The Chinese yuan, though not yet a fully convertible currency, has been steadily gaining prominence in global trade and finance. As China's economic might grows, the yuan's internationalization is expected to accelerate. Section 1. Rising Stars. Currencies Shaping the Future. Emerging market currencies are capturing the attention of investors and economists alike. These currencies, often representing nations experiencing rapid economic growth, offer the potential for substantial returns. Among the rising stars are the Chinese yuan, the Indian rupee, and the Brazilian real. The Chinese yuan has become a focal point in international finance. The Indian rupee, backed by India's burgeoning technology sector, is also gaining traction. As India continues to liberalize its economy and attract foreign investment, the rupee is poised for further growth. Its performance is closely watched as a barometer of India's economic progress. Emerging market currencies offer the allure of high growth potential, but they also come with inherent volatility. This volatility stems from political instability, economic fluctuations, and dependence on commodity prices. One key driver of volatility is political risk. Emerging markets often grapple with political uncertainty, corruption, and regulatory changes. Economic fluctuations also play a significant role. Emerging economies are often more susceptible to global economic downturns or commodity price shocks. Despite these risks, the potential rewards of emerging market currencies continue to attract investors. These markets often offer higher interest rates and greater growth opportunities compared to developed economies. Investing in emerging market currencies requires a careful balance of risk and reward. Investors must conduct thorough research, understand the underlying economic and political dynamics, and be prepared for potential volatility. Diversification and a long-term investment horizon are essential for mitigating risks. One key consideration is the strength of a country's economic fundamentals. Factors such as GDP growth, inflation rates, and foreign exchange reserves can provide insights into a currency's long-term prospects. Political stability is equally crucial. A stable political environment with sound governance is essential for attracting foreign investment. Investors should also consider the role of external factors like global interest rates and commodity prices. Navigating the complexities of emerging market currencies requires expertise, patience, and a willingness to embrace volatility. Currency values are in constant flux, influenced by a complex interplay of economic factors, geopolitical events, and market sentiment. These fluctuations have profound implications for businesses, consumers, and policymakers alike. One of the most significant impacts of currency fluctuations is on inflation. When a country's currency weakens, imported goods become more expensive, potentially leading to higher prices for consumers. Conversely, a stronger currency can help to keep inflation in check by making imports cheaper. Currency fluctuations also impact interest rates. When a country's currency weakens, investors may demand higher interest rates to compensate for the increased risk. Understanding these dynamics is crucial for policymakers, business leaders, and investors alike. Section 2. Global Trade. Riding the currency waves. Currency fluctuations are the lifeblood of international trade, influencing the competitiveness of exports and imports. For businesses engaged in global commerce, understanding these dynamics is paramount for success. When a country's currency weakens, its exports become more affordable for foreign buyers. Conversely, a stronger currency can make exports more expensive, potentially hurting sales. For businesses operating in multiple countries, currency fluctuations can create both opportunities and challenges. Managing currency risk is essential for businesses engaged in international trade. Companies employ various strategies to hedge against adverse currency movements, such as using forward contracts or options. Section 3. Investment decisions. Navigating the currency maze. Currency fluctuations introduce an additional layer of complexity for investors navigating global markets. The returns on international investments can be significantly impacted by currency movements. When an investor purchases an asset denominated in a foreign currency, the value of that investment in the investor's home currency will fluctuate with the exchange rate. Investors employ various strategies to manage currency risk in their portfolios. Some investors choose to hedge their currency exposure by using financial instruments like forward contracts or currency ETFs. Others adopt a more passive approach, accepting currency risk as part of their overall investment strategy. Understanding the dynamics of currency markets is essential for making informed investment decisions. The future of money is digital. This evolution is driven by groundbreaking technological advancements, transforming how we perceive and utilize currency. Cryptocurrencies, blockchain technology, and digital payment systems are rapidly becoming integral parts of the global financial system. Cryptocurrencies, like Bitcoin and Ethereum, offer a decentralized and potentially more secure alternative to traditional currencies. These digital assets operate independently of central banks and governments, relying on cryptography and blockchain technology to ensure secure transactions. Blockchain, the technology underpinning cryptocurrencies, has far-reaching implications beyond digital currencies. The rise of digital payment systems is another transformative trend shaping the future of currency. Mobile payment platforms and contactless payment technologies are gaining popularity, offering convenience and speed for consumers and businesses alike. The global economic landscape is in constant flux, with emerging economies playing an increasingly prominent role. As these nations experience rapid growth and exert greater influence on the world stage, their currencies are poised to gain prominence, potentially reshaping the balance of power in international finance. China, with its burgeoning economy and ambitious global initiatives, is at the forefront of this shift. The Chinese yuan, already a major player in international trade, is steadily gaining recognition as a potential reserve currency. China's efforts to internationalize its currency and reduce reliance on the US dollar are reshaping global financial flows. India, with its vast population, burgeoning middle class, and thriving technology sector, is another rising economic powerhouse. The Indian rupee is steadily gaining importance in regional and global trade, reflecting India's growing economic might and integration into the global economy. Other emerging markets, including those in Southeast Asia, Latin America, and Africa, are also experiencing significant growth and attracting increasing investment. Their currencies, while often volatile, offer potential for substantial returns as these economies continue to develop and integrate into global supply chains. The future of global currencies is linked to technological advancements, geopolitical shifts, and economic trends. Navigating this landscape requires adaptability and understanding of global dynamics. The interconnectedness of the global economy fosters trade, but also increases susceptibility to shocks. Events in one part of the world can impact currency values globally. Geopolitical uncertainty adds complexity, affecting currency values and market volatility. New technologies like blockchain can revolutionize financial systems. Emerging markets offer new avenues for investment and trade. Staying informed about these trends is crucial for navigating future challenges and opportunities. Global currencies are the threads that weave together the intricate tapestry of the world economy. From the bustling trading floors of Wall Street to the local market stalls in emerging economies, these units of exchange facilitate the flow of goods, services, and capital, shaping our interconnected world. Understanding global currencies is not just about deciphering exchange rates or tracking market fluctuations. It's about comprehending the forces that drive international trade, influence investment decisions, and ultimately shape our daily lives. The price we pay for our morning coffee, the cost of our dream vacation, even the stability of our jobs, are all influenced by the ebb and flow of global currency markets. As we've explored the intricacies of major currencies like the US dollar, the euro, and the Japanese yen, and delved into the rising influence of emerging market currencies like the Chinese yuan and the Indian rupee, one thing remains clear. The world of global currencies is dynamic, complex, and constantly evolving. By grasping the fundamentals of currency markets, appreciating the interconnectedness of the global economy, and staying abreast of emerging trends, we can navigate this complex landscape with greater awareness and make more informed decisions in our increasingly interconnected world.